I'm a big fan, at least at this point, of precious metals. Silver much more than gold. I recommend that in the book. Um, and I remain a very strong proponent of that because those commodities, which they are, go up when the dollar goes down, and of course they have. I've been recommending silver since it was $4 an ounce. It's currently trading at about $26 or $27 an ounce. The caveat would be, you know, past results are no guarantee of future results. I have to put those kinds of disclaimers in. These are just my opinions, but they're based on certainly what I believe to be sound economics, and they have proven true over the last several years. From an investment perspective, I go back to something I said earlier. Some decent percent of folks' reserves should be in precious metals. What that percent is really is up to the family and what their risk tolerance is and so forth and so on. But some decent percentage of a family's reserves should be in precious metals. If the dollar completely goes to hell, which is not out of the realm of possibility, precious metals are a form of exchange which could be used. At the very least, from an investment perspective, precious metals have been going up here for the last 10 years at a dramatic rate. Gold has gone from $253 an ounce to, well, it's currently trading at around $13.60 or something like that an ounce. So that's whatever that is, 6-7 times. Silver is similar, as I said earlier. Silver's gone from roughly $4 an ounce to $25, $26, $27 an ounce. It doesn't mean that they're going to continue to go like that forever. They won't. No market goes straight up and stays there. But when you have the kind of fiscal responsibility that we've got, and dollars continue to be printed on a printing press, to use a metaphor, this is a good place to put your reserves. In addition to that, I recommend that people diversify out of U.S. dollars to some degree into some other foreign currency. You can do that in I'm a fan of the Norwegian krone because that country has no debt whatsoever. They get about $1.5 billion a week in revenue from the North Sea oil, and they've paid off their debt. The Chinese RMB, which stands for renminbi, which is one of the names of the Chinese currency. That currency has two names, the yuan and the renminbi. That country is producing. And so that currency is strong. And China has resisted the increase or revaluing or lifting what has really been a cap on the value of the RMB. But they'll have to. It started to inch up recently, and I think, personal opinion, I think it's going to go higher. So Norwegian krone, the renminbi, the Australian dollar has been strong, the Canadian dollar has been strong. If one looks. Almost any currency has been strong relative to the dollar because while other governments are fiscally irresponsible, nobody has matched what has happened in this administration in the last couple of years. So some precious metals, it doesn't hurt to do some foreign currencies. You can do that. There's a bank in Florida called Everbank. I talk about this in the book. And they have foreign currency deposits. You can do that. I'm not saying everything. I'm just saying take a little bit of the reserves and it just diversifies your bets a little bit into some foreign currencies. So precious metals, foreign currencies, and cash. Stay out of debt. Occasionally people say, well, what about real estate? Right now, I don't think the real estate market is done going down. Now, that's a general statement. That said, there are always exceptions. A friend of mine, a client of mine, came to me some time ago, and he said, I've got an opportunity to buy some real estate. We were here in Los Angeles, and I said, I don't think the LA market is done falling. He said, no, it's in Arizona. I said, well, I don't know that market real well, but he said, well, this is a 4-bedroom, 2-bath home. It was on the market for $208,000. The bank is foreclosed. I can get it for $38,000. I said, write a check tomorrow, today. So there are exceptions to everything, and people can find individual investment opportunities that are great. In a situation like this, economic times like this, cash is king. So some precious metals, some foreign currencies, stay liquid. We provide a what's called an inner circle, in which I put out audio blogs or written blogs on the subject of finance or the economy. People can sign up for that at crisisbydesign.net. Crisisbydesign.net. You can get the book there in PDF format, in paperback, or in hardback. And you can sign up for an Inner Circle membership. I think when you buy the book, you get a free month membership in the Inner Circle, and then there can be a monthly fee. I think it's $19 or $20 a month. And when things occur, I send out either a written or an audio blog, and let people know. And so that's a way people can stay connected, and they'll get the information. I write some, I do some tweets. I have a blog on my personal site, johntrumanwolfe.com. But in terms of major developments in the economy, this Inner Circle membership gives folks a constant stream of information on what's going on, and I try to write in a understandable and entertaining way so that people aren't put off, because the subject of economics can be daunting to people. I don't write it that way. My experience is this, that women in households are making financial decisions and have been, particularly over the last couple of decades. They're either making joint financial decisions with their husband, and or in many cases I have come across, it's the wife that, whether it's a career woman or not, is the determining factor in, good, what do we invest in, etc. So it's really a matter of education, and maybe women have a higher confront of absorbing knowledge and making decisions, because when you have the right information, you can make the right decisions and do the right investments. So I'm a fan of women. I have a wife, I have 2 daughters, I have 4 granddaughters, but seriousness, or joking aside, humor aside, my experience is that women are taking more and more, whether it's control, but becoming more and more a part of what's happening with the family's retirement accounts, and that's the way it should be. It should be a shared process. And the wrong solution is to bury your head and hope that government will solve it, or some economists will solve it. The fact of the matter is, if somebody is going to be responsible for their financial condition, they need knowledge to be able to take control of what's going on. Now more than ever, the wrong thing to do is to stick one's head under the pillow. It is to empower themselves with knowledge, and that's in truth the main reason that I wrote the book.